In the long run, vaults will be used for all asset control. We're going from 20 billion to 20 trillion. In the next 12 to 24 months, companies like BlackRock will double down and bring all of their value in ETF to chain, 1,000 times more value. You may have also heard that institutions are finally saying, if you can't beat them, join them. And they are quickly accepting crypto. From the Digital Asset Summit 2026, we got a lot of clips. Everything is brand new. We even got Swift to say that they will work with more public blockchains in the future. It's clear that going over this information with you will be a lot of fun. If you like the movie, please leave a comment below. Thank you very much for your time. It's always an honor. Let's begin with Matt. In the long run, vaults will be used for all asset control. I think that to be true. The next thing I'll do is the same, possibly off-putting, which is to say, Matt, you're crazy. People often believe me when I say that all asset management will eventually be done through vaults. This is likely because vaults are very small, with only $20 billion in NEM, and everyone invests through ETF, which have $20 trillion in NEM. That's 1,000 times more. And right now, Bitwise is in charge of 193 million XRP right now. It's an ETF safe. There will be many chances in the days to come. Seems like we're not putting enough thought into how all of this will affect things. For the next part, what are you seeing from institutions? I thought this clip was great. It's like, if you can't beat them, join them. They know the train has left the station and they need to get on it now or it will cost them in the long run. Those are really nice words. We've heard this before, right? The train has left the stop. It's been a while. Shoo. Take a look. I think you could say that what you're seeing from institutions is a case of, if you can't beat them, join them. They must know that safe coins, tokenized assets, and other uses of this technology are now the norm and they need to get on board, or it will cost them in the credit card companies and business banks are both trying to make the same amount of money. These businesses are going up against the stable coin companies. That's why they are arguing right now in the Senate. Something else we can talk about. First, we can talk. To begin, let me explain my own theory about the choice of blockchains. Permission lists truly neutrality. I believe this will happen in stages. From my point of view, we will have a more centralized, permissioned choice by many institutions to begin with. Some of those things will help you make progress. Peer-to-peer decentralized financial visions that are neutral, global, permissionless, and hard to censor are the bigger prize. But I don't think the financial system is fully ready for it yet. That's where the bigger win is. I don't know if the tech works or not. Is fully ready, knows about privacy and identity. For the pure Ethereum vision, if you will, to come true, we need to fix a few things. As a result, I believe we will see centralized forms of tokenized banking that crypto users may not enjoy. However, we must keep working toward that goal. We'll get there. We'll get to that clear goal in the end. Okay, let's keep going. I thought this clip was a great way to end. Look at very steady trading of tokens. Values that are much lower than cash values with dedicated management teams and value that often comes back. I'll play the clip now. For the past few years, tokens have been trading cheaper than stocks. Finally, there is a problem with the investment layer. There aren't enough basic investors. In the long token bear market that has been going on for 5 years, token profits have been terrible. We also see that we put a lot in small caps. Tokens that are very strong and have dedicated management teams will trade for a lot less than their face value, and usually regular income. Only this part of the stack is being looked at by no one else in the market. This is because people have left the token markets for many good reasons. And I think you agree with everything Santiago said. The only thing I'd add is that I think there is hope for tokens as a way to raise money. We've thought this the whole time. Okay, let me go on. I'm sorry, I was listening to something in my headphones. That's the reason I looked around. Okay, a new point of view on Swift, a blockchain, and Tom Zchesh, manager of new ideas at Swift. I've been on talks before where people said, when this happens, what do you mean? Swift pretty much goes away, right? Like, no, not really. I would buy Swift stock if I could, right? The world is only getting, and I can't do it. No one can because it's a family-owned bank co-op. Actually, we're in a very special spot because we can now add new assets to the process, such as tokenized deposits, deposit tokens, stable coins, and CBDC in some parts of the world. And we can, in fact, expanded to new places to live, such as public and private blockchains. On top of the SWIFT network, we're putting a blockchain that can be put together in different ways. This way, we can connect to new settlement sites that banks want to reach. So I believe we are in a great place. I believe it's important. I believe that the network will continue to see more traffic as it works. It sounds like Swift needs to work with some public blockchains that we already know about, but they don't want to. When you look at the partnerships and pilot programs they've been putting together with some of Ripple's biggest clients and customers of big banks around the world, you start to wonder when Swift will finally come out and say, hey, we're going to work with Ripple and the XRP ledger and make it public. I'd love to see that day. Will it come? We'll see, I guess. Okay. The idea that institutions will switch to groups that are completely open. This is true, so I thought it would be interesting to talk about it here. He's so right in 100 different ways, but let me play a 21-second clip first and then I'll tell you more. So, one thing we've talked about is the idea that institutions will switch to chains that are totally open. That is not going to happen. That much is clear. Everyone must think I'm crazy since they are all putting together institutional answers on top of public chains. I don't know. It's possible that I'm wrong. We'll see. They're good, though. They're making new systems because they know they need to connect to these ones in order to move money. On top of those public blockchains, you will need private layers, though. So the XRP ledger is mostly open at the base level right now, but it also has some privacy-related tools for selective sharing and real cryptographic privacy. With new standards like the private MPTs, XLS 96, and other features like these, it is now on their short-term plan. Accounts with fake names and a public ledger. The core of the XRP record is still a traditional clear ledger. Account numbers, balances, and transaction amounts are all visible to everyone, but they are only linked to fake accounts if they are related to a real person on the chain. Credentials and approval domains are two of them. The credentials are emphasized in the Ripple X institutional plan. Live features like permission domains and compliance are used for compliance and controlled access. This lets institutions control who can connect with or view certain information while still settling on the XRP ledger. There are also controls that are focused on compliance, such as deep freeze. Existing compliance tools like deep freeze and related controls let issuers or institutions limit the movement of assets in line with KIC, AML, and regulatory requirements. This is important because private assets of the future will still need to be able to be heard and controlled. There are also hooks and sidechains. XRP sidechains let different ledgers have their own transaction rules. This could lead to designs that focus more on privacy, like Zhao, which shows how custom logic can be used to handle balances in a key way. Of course, we know that this secret MPT's XLS 96 is on its way. The people who work on XLS have suggested adding confidential transfers for given tokens to the confidential MPT standard. On the public ledger, you need privacy in order to be able to use the liquidity of the XRP platform. You also need privacy. Ripple's X institutional D5 roadmap for XRP is built around three main points: compliance, credentials, and deep freeze. Native lending is already live and planned for the XRP Ledger v3, along with the inclusion of zero-knowledge proof technology to allow private transactions that are compliant with regulations. In order to compete with Stellar, Solana, Polygon, and other chains, they are building on public chains. This is because all of these chains do similar things. Man, you need to get with the times. I did want to move on to this clip, though. Does the market move towards selling without any permissions at all? Do what you want if there is no AML kick. Obviously, that's been a very successful platform or framework for things that are sold in superstores. I don't think that's where big capital markets will go. You can still expect AML kick to be in place. Okay, if you agree with that, then the question is whether or not dispersed matching is very helpful. Or if you already have a known middleman like NYSE, NASDAQ, etc., does the matching happen in a central matching engine and the settlement happen on the chain? I'm not sure. I could see the world changing to the point where there's a lot of shopping stuff, and maybe most of it is perps on venues that don't need permission. probably perps on venues that do. There are futures markets in the US, and then the big stuff is put on the chain. That sounds good. Let's go on. More to break Franklin Templeton's record of $1.07 trillion in assets under control. It's all connected to Ondo Finance. This message was sent to us not long ago. This will be very important as it will bring trillions of dollars to the chain through this relationship. Let us look. Sandy, let's get back to you. What size do we mean? How very big? Franklin Templeton is a financial management company worth $1 trillion. Of course, cryptocurrencies have a market value of about $2.05 trillion. TVL on the chain is still low. Look at this. The world's ETF market is worth $30 trillion, yes? But let's say that new users bring in an extra 5% of the ETF market. This could be a very low estimate, Andy, but even at that low level, $1, 5 trillion more would enter the crypto ecosystem, which is a huge increase in the total value on chain compared to now. Yes, it could be a lot higher than that, but I don't see why it would be. All right, let me play this next video. The main goal is to make everything